So don't be that guy 2 years from now, right?
And there's a lot of people, I've been working with a lot of buyers that have been looking for, a year or two, and they're just kicking themselves now because they wish they would have gotten the market back then.
And they will in 2024. We'll be having this conversation and talking about that.
Still kicking themselves.
And we look at videos that you and I did 2 years ago, urging them to move forward. It's a great time.
Yep, it is. Hello, this is Ryan Zachos with Zachos Realty. Today I'm sitting here with David with NFM Lending, and in today's video we're going to talk a little bit about lending, mortgages, interest rates, all things that you as a buyer might want or need to know. But first, before we dive in, can you tell us a little bit about your background, how you got started, what drew you to mortgages for an industry, and all that?
Yeah, great question. So I started in 1994. I grew up in Sarasota, Florida. I went away and played football in college. I came back. I wasn't sure what I was going to do, but I always wanted to help people. So I actually got into real estate doing what Ryan did. And as I was helping people get into homes, I became fascinated with the numbers and helping people find the money that they needed to live the life they wanted. So that transitioned me in 2011 into mortgage.
Awesome. And you've enjoyed it since, I guess. You've been there for 10 years, right?
Yeah, it's been a great 10-year ride. Helped thousands of people get into homes. People didn't think they could get a home. Yeah. So that's always nice when they get the keys at the closing.
That's exciting. That's the part of the rush with both of our industries, I guess, is stuff that we think is hard or difficult that people are struggling with. We can jump in and help out and be successful at that.
Well, you do. Most people don't think they have the money to get into the home that they want or the condominium. And we talked about it earlier with prices rising. It's just nice to have the experience to be able to help people do that.
For sure. Let's dive right into some of the questions. And I'm going to start with some basic questions that we talk about in a lot of videos, and then work our way to a little bit more specific stuff that might be really appealing to the buyer out there. So starting with interest rates, give us a quick snapshot of where interest rates are at for 30-year, 15, and then maybe some of the programs like FHA, VA, conventional, and how they all break down.
Excellent. So interest rates are on the rise. So we're expecting in 2022 to have 4 rate increases. They've already gone up. We're up 1% from this time a year ago, but they're still historically low. I think it's all about perspective.
It is, yeah.
So today, 3.875 on the 30-year fixed mortgage. At 15 years is going to be about 3.25.
Okay.
On that.
And that's on a conventional loan.
That's on a conventional loan. And then you have investment property. A lot of investors buying. Great cash on cash returns. We have great investment programs. Usually about 4.375. Paying a point equals 1% of the loan amount. So you don't have any 0-point loans on those.
Gotcha. So you're always paying at least a point, and you'll get it down to in like the low 4s or mid 4s, basically.
Correct.
Okay. FHA and VA, I know historically they've been lower than conventional in interest rates. What are those sitting at?
So those are around the same as conventional right now. So FHA is a 3.5% down program that allows borrowers to stretch into homes. We can have a higher debt to income ratio. Nice. Those interest rates are running right around 3.875 as well. And the VA, we love helping our veterans. Those are 0 down home loans, and those are also right around 3.875 today.
I thought you said, we were talking earlier, and you kind of said something that stuck out to me. The amount of dollars in difference from a $370,000 loan from a year ago to today, and even a month ago to today. You want to talk about that for a sec?
Yeah. So as home buyers rush into the market to buy something prior to home prices continuing to rise because of low supply.
Yep.
As the rates go up, I always tell people there's never been a better time to buy real estate than now, because you can cash in on some equity, try to buy before rates go up.
Of course.
So on a $370,000 home 1 year ago, the payment was about $200 less. So that's a pretty big deal for people buying real estate. Yep. And then just 1 month ago, you would pay about $100 less.
Right.
So the rates have increased that much just in a short period of time. And if they continue to go up, affect the buying power.
Of course. And then, so knowing that, like we said, the best time to buy is now. What is your projection then for interest rates throughout the rest of this year?
I think with inflation, everybody's afraid of inflation. So I think, and with the government tapering off the bonds since the pandemic of the COVID-19, rates are going to continue to rise. Yeah. But that doesn't mean, it's a bad time to buy real estate, because we talked about it, perspective, we're historically low. So if we're below 4, I remember during the last boom in 2004, 5, and 6, the interest rate was between 5.5% and 6%, and nobody thought anything about it.
Right.
They just continue to buy. So we're at below 4%.
Right.
So we're still in great shape.
And I think it's like funny when people are complaining about having a high interest rate at 3.8 or something like that,
Right.
and I'm like laughing because 4 years ago when I bought a house, it was 4.25, and I was like pumped that it was 4.25.
Yes.
So it's just all about perspective. But to your point, there is a big dollar difference from low interest rates to high interest rates. So if you're going to buy and you're looking, I would much rather pay equity in a home than the bank on interest rates personally.
Well, you do. And my thoughts are prices continue to rise, rates continue to rise. So a lot of people that are waiting, and we have stories, and I had a gentleman 2 years ago, when they call, they wish they would have bought 2 years ago.
Right, of course.
They said, rates were lower and
Right.
the prices were lower. So don't be that guy 2 years from now, right?
And there's a lot of people, I've been working with a lot of buyers that have been looking for a year or two, and they're just kicking themselves now because they wish they would have gotten the market back then.
And they will in 2024. We'll be having this conversation and talking about that.
Still kicking themselves.
And we look at videos that you and I did 2 years ago,
Right.
urging them to move forward. It's a great time.
Yep, it is. So what goes into dictating those rates? I've heard credit score, but what are some other things that are?
So a lot of things go into rate. So when you see online or you see the TV talking about it, and we talk about the annual percentage rate, that's the rate expressed as a dollar amount. So which is a little bit different than the interest rate, but we talk about interest rates. But credit score is a big deal, so it moves in buckets. So a 740 and up FICO score is going to get you the best interest rate. 720 to 740 puts you in a different bucket. And if you're below 700 on a FICO score, the rates and or fees are going to be a little bit higher on those. And then we also look at the type of occupancy. So a primary home is going to be a better interest rate than an investment property. And big changes coming for second homes starting in April 1st of 2022. For second homes, they're going to raise the interest rate
even more,
like they do for investment property.
Gotcha. I know I get that question a lot with buyers, but how does it work if you have a spouse or a partner that has a lower credit score or maybe a higher debt to income or something like that? How does that work when regarding the interest rates and working as a family unit?
Yeah, great question. So you need two people nowadays to buy the home you want and get the lifestyle that you want. So we look at the lower middle score of the lower borrower. So when we do interest rates, there's 3 scores: Experian, Equifax, and TransUnion. We look at all 3, and then we take the middle score. So the middle score will say a 720. We would take that score for our pricing and give you the rate based on that.
And then just on the lower borrower.
Just on the lower borrower.
So that you don't really get much credit for the higher borrower,
no,
unfortunately.
In the old days, we used to take the higher score of the higher borrower.
Nice.
And now we take the lower score of the lower borrower.
Of course.
Yes.
That's funny. Are there any specific programs out there that you recommend? I know we've talked a little bit about conventional, FHA, VA, FHA, VA, different programs in themselves, but are there anything else that you know out there that people can utilize?
Well, I like the conventional program. There's a great 3% down program, and it doesn't matter how much money you make. You do have to be a first-time home buyer, and that's the definition. As long as you haven't owned a home in the last 3 years, you qualify as a first-time home buyer. So that's 3% down. And then we do have some down payment assistance programs coming up that are going to be good for us to use.
I'm going to kind of dig into a little bit more questions that you probably don't see on these videos or people talk about, but regarding shopping lenders, how do you recommend doing that? I know there's kind of like that elephant in the room where you should only talk to one person or 2 people because they pull your credit score. And so what are the pros and cons with shopping lenders? How do you do it effectively? What should someone look for in interviewing a lender or talking to a lender? That
great question. And I always urge people to look at more than one lender. And the biggest misconception is don't let more than one lender pull your credit at one time, because you don't want to lose multiple points. But the government wants you to be able to get the best interest rate, the best terms. So as long as you look at multiple lenders within a 30-day period, even if multiple people pull the credit, it only counts as one pull.
Oh, nice.
So, and the points come right back. And you don't lose 20 points. You might lose a couple of points. But you're looking at lender fees. So all lenders have fees that range anywhere from $900 to $1,500. All the other closing costs associated with closing a mortgage in the state of Florida are third-party charges. And then we look at escrow accounts, which is taxes and insurance and prepaids. So having a good lender is more than just fees, because you're looking at everybody's situation is a little bit different. So if you're looking for the absolute lowest fee, then you're looking at one thing, but you know more goes into it in the competitive real estate market. Because for me, is you want excellent communication, you want the least amount of stress, and then you want to close on time.
Right.
So usually local, you know, when people are coming from out of the area, a local lender deals with local appraisers who know the market.
Yep.
And as the market's changing daily and weekly, you want an appraiser or a team that understands those changes.
And that's essential. I feel like there's a lot of people that are ordering appraisals that work with a national company, and they're coming in from an hour outside of town, and they're typically under appraising or other issues there. That's really good information. I also think that, you talked about the fees. I mean, $900 to $1,500 is not that big of a difference. So you're not adding or saving a ton of money by thinking you're going with a different lender just because you're getting better fees on that.
You do, and the other thing you want to look at is reviews. Like in any business, you guys are a great real estate company. You have an amazing, reviews. I've seen what you've done in the local marketplace. But me locally, so I have over 270 5-star Zillow reviews. So it's what other people talk about me.
Yeah.
So after 28 years, I always feel like I have the experience to get the job done in a reasonable amount of time. But also, I have a service that matches the experience.
Yeah, for sure.
And I think the experience is the most important part.
Yeah.
And also access to the lender. Are they around in the evenings, on the weekends, not working banker hours?
Right.
Because when you need to know what the numbers are for the dream home that just popped up, you can't wait for someone to call you back. You need access to those numbers.
Absolutely.
And all that goes into it. And then buy downs is another thing. A lot of, in this market, especially as the rates continue to go up, you can buy the interest rate down. When you buy a rate down with points, it doesn't go to the lender. Lenders aren't allowed to make money on rate in 2022. We're just not allowed to.
Right.
So that money would go towards a lower rate. So you want to make sure that the interest rate you're getting, what are you being charged for that?
Right.
And I had a veteran in my office, last week that was doing a refinance, and he was being charged, $8,000 in points or fees, and he didn't realize that.
It's crazy.
He was just looking at the rate.
Right.
But when you deal with somebody local too, and you can look somebody in the eye, sit down with them, it does help, and that doesn't always work that way.
Right.
But a lot of the .coms is everything's done over the internet, and they're counting on you not reading the fine print.
Right.
Just click, 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 and sign, sign, sign.
And I've noticed that with a lot of big banks or even these big, huge lenders, like national companies. I've helped clients, and they're like, "Well, I'm getting a 3.5. Why is your local guy trying to give me 3.8?" And I was like, "Well, let me look at your loan estimate there, and we'll see what all the hidden fees involved." And a lot of times they are buying down something to get to that rate. And also another misconception I hear a lot is like, your guy is giving me a 3.8. I can get it at 3.7. Is that customer service that much better? At the same time, that 3.8 rate to 3.7 rate, you're talking how much a month?
You're talking about anywhere, depending on the loan amount, anywhere from $12 to $17
exactly.
a month. So it's very nominal. So for me, it's really the service.
Right.
You want the great service, and I always equate it to the Ritz-Carlton, right, versus Walmart. Two great companies, but they offer different things.
Right.
So you kind of want to meet somewhere in the middle.
And I think you point out another good point of why it's important to choose someone local, even though it might be that extra $15 a month or whatever it may be. And it might not always be that way, but sometimes it could be. But to have a local appraiser, someone that you could walk into their office, talk to them in person, I think those are all big things. Because, if you get a really bad appraiser from someone that's a national appraiser or whatever, or a state appraiser that's outside the area, that could blow up a deal. If it appraises 50,000, 100,000 under, and you might not get your dream house, and it's not that your house is really worth that. It's because one person with a laptop that doesn't even live here is trying to protect the bank, essentially.
Yeah, I agree. We're like pilots, and sometimes these real estate deals get a bit turbulent and bumpy.
Right.
And our job's to land, smoothly and safely. And we've seen those deals where appraisers blow up deals because they don't know the market.
Right.
And and other agents have also seen that. Yeah. So when you're going to make your offer, and there's 7 other offers, I believe the lending institution, your local bank, your local lender carries more weight.
I agree.
With the offer, and that's important because you want to get the house.
The last question would be, I often hear, if you can do it, do a 15-year. Based on a 15-year to 30-year, what are the pros and cons? Do you have a recommendation on that?
So 15 years going to obviously save you hundreds of thousands of dollars in interest the first 15 years of your mortgage usually is interest.
Yeah.
Okay, so it takes a little bit of time to pay that loan down, and then once you get to 15 years, to start supercharging it. So if you can do a 15-year, that's the way to go.
Yep.
What a lot of people do that I'm seeing is they'll do a 30-year mortgage, and then they'll make extra payments on their own to make the 15-year payment.
Just on the principal.
Right, just a principal reduction.
Yep.
But then if something comes up, car breaks down, they want to go on a trip, they need money for education.
Right.
They're not obligated to the higher payment.
Right.
Usually you're looking anywhere from $400 to $600 higher on a 15-year mortgage versus a 30-year mortgage. So you have to weigh out the pros and cons.
Right. And with interest rates being so low, I've heard a pro being leverage the bank. Leverage the bank. So, but I love that idea of one extra payment a year to your principal is like cutting your mortgage from a 30 to a what?
Almost 24. So it's a big deal.
That's just one a year.
And you can do bi-weekly payments, so that doesn't affect your lifestyle. You just get set up every 2 weeks to make that payment, and it equals one extra payment on that. So that's pretty good. I just refinanced one of my personal homes to a 15-year loan because I was able to take advantage of the lower rate.
Right.
And my payment didn't jump too much.
That's awesome.
So really, it's a personal choice.
Awesome. What is your value prop? Why do you think you individually and as a company, NFM, are better than your competitors? And why should any buyer in the area look to choose you as a lender?
Man, all great questions. and I think for me, it comes down to experience. Mm-hmm. So for me, having 28 years in the business, over 8,000 loans, 275 star reviews. So I think the company that I stand for, National Fidelity Mortgage, NFM Lending, we're a $25 billion company. We use our own money, so we're what they call a correspondent lender. So when you deal with me or my team, you always have somebody that's going to pick up the phone, get you the best deal, and close on time. And I'm happy to say last year out of 390 deals, 380 deals closed on time.
That's awesome.
So only 10 didn't close.
And that's rare in this market, especially last year.
I'm proud of that.
Yeah.
So I think, for me, you want to look around, read the reviews, and then, make your decision based on your gut and then what makes you feel good. And, and then really use Ryan to find the house that you need. And together, we can get you into that home.
For sure. I appreciate you taking the time to come out. If you guys have any questions at all, please don't hesitate to comment below or reach out directly to David or I. I'm going to put our information in the description. If you have any questions, talk to you soon.